Welcome back to Smart Stock Sam, and today we are going deep on BitMine Immersion Technologies, ticker BMNR, because right now this stock is sitting at one of the most dangerous and most exciting crossroads. Is it range-bound, slowly coiling like a spring before a violent breakout? Is the recovery already underway and most traders are simply too scared to see it? Or is the next move actually a crash, a breakdown that wipes out every bull who stepped in at these levels? And what does the price target look like heading into next week? I am going to answer every single one of those questions today, but I will tell you right up front, the institutions are not panicking and neither should you. We have a validated floor, a treasury worth billions, a massive revenue catalyst launching this very quarter, and a gamma squeeze setup in the options market that could make this thing explode higher faster than most traders are even imagining. Buckle up, because the story here is far bigger than the headline noise is letting on. The core thesis for BMNR comes down to 4 pillars, and every single one of them is firing at the same time right now. First, we have a validated floor at $18.68, a level where institutional buyers have literally drawn a line in the sand with their capital. Second, the stock is trading at a price-to-book ratio of 0.8, meaning you are buying a full dollar of hard assets for just 83 cents. Third, the MAVAN launch this quarter is projected to send annualized staking revenue all the way to $253 million. And fourth, Wall Street consensus currently puts the price target at $34.50. That is nearly 100% upside from recent lows. Now, before anyone says those numbers sound too good to be true, let me walk you through exactly what happened in the market last week, because the data is going to speak for itself. On February 28th, retail traders panicked. The headlines were ugly, social media was screaming doom, and the sell-off looked like it had no bottom. But right here on this channel, we had flagged $18.68 as the critical institutional support floor. So what happened? The stock hit an intraday low of $18.65, 3 cents of variance. That is not a coincidence. That is institutional defense at its most precise and deliberate. The moment that level was touched, smart money stepped in with overwhelming force, triggering an 11% surge in just 48 hours, driving the stock all the way to $21.87 by March 4th. This was not a lucky bounce. This was the blueprint executing exactly as the data had predicted it would. But just when momentum was building, the market threw absolutely everything it had at BMNR. Between March 5th and 6th, we witnessed what I would call the ultimate stress test for the bulls. A macro shock hit first, a jobs report revealing 92,000 jobs lost, oil spiking past $90 a barrel, and the Dow suffering a 900-point bloodbath in a single brutal session. Simultaneously, Culper Research released a targeted short report specifically engineered to create a death spiral narrative around BMNR and Ethereum. The shorts were throwing the kitchen sink at this stock, and despite all of that combined pressure, BMNR closed at $18.88, still holding above the validated floor at $18.68. Ask yourself honestly, how many stocks in any sector hold their institutional floor through a simultaneous macro collapse and a coordinated short attack? Almost none, but BMNR did. So what exactly are the bears arguing, and does any of it actually hold up? Culper Research is making 3 specific arguments, and you deserve to hear them clearly before we break them down. Their first claim is that Ethereum's recent Fusaka upgrade was a failure that collapsed gas fees by 90%, destroying the deflationary burn mechanism that gave ETH its value narrative. Their second claim is that 95% of new Ethereum wallet growth is nothing but spam and address poisoning, artificial activity designed to mask a dying network. And their third claim is that validator yields have fallen so far below United States Treasury rates that there is no longer any fundamental reason to hold ETH at all. They also highlight that Vitalik himself has sold over $40 million worth of ETH since January. Now, here is the question I want you to sit with for a moment. Does it strike you as strange that while Culper is writing reports about a collapsing ecosystem, Some of the most conservative, risk-averse institutions on all of Wall Street are doing the exact opposite with enormous conviction. While retail was selling the news and short sellers were crafting bearish narratives, Bank of America was doing something absolutely jaw-dropping. They increased their BMNR position by 1,668%, not 68%, not 168%, 1,668%. One of the most conservative financial institutions on the planet did not just buy the dip, they absolutely hammered it with conviction. And they were not alone. Strategic Investment Solutions hiked their stake by 1,000% on February 27th, the day before that 1868 floor was defended with such stunning precision. These are not speculative retail traders chasing meme stocks. These are Tier 1 institutions accumulating BMNR at a discount they clearly believe is historic and will not last much longer. ARK Investment Management, Cathie Wood's firm, known for making bold and often correct long-term technology bets, just established a brand new $387 million stake in BMNR, making it their 12th largest position. Vanguard Group, arguably the most conservative long-term indexing firm in the entire world, initiated a $148 million stake. When ARK, Vanguard, and Bank of America are all signaling extreme conviction at the same price levels at the same time, you have to stop and ask yourself one very serious question. Who do you trust more, the short sellers looking to profit from a headline drop, or the institutions building multi-hundred million dollar long-term positions with their clients' retirement savings on the line? Think about that before we move on, because the answer matters enormously for what is coming next. BMNR has repositioned itself as something far more powerful than a traditional mining company. It now operates the world's largest corporate Ethereum treasury, with a stated mandate to aggressively capture 5% of the total global Ethereum supply. As of early March, they hold over 4.4 million ETH, approximately 3.71% of every single Ether in existence. At current valuations, this digital vault is worth between $9.1 billion and $9.9 billion. The company is transitioning from a simple miner into a massive yield-focused powerhouse. And here is the part that should stop you cold. The stock market is currently valuing all of this as if it is worth less than zero. That is not hyperbole. The price-to-book ratio of 0.8 means the market is literally pricing this treasury at a 20% discount to what it would cost you to go buy the same ETH yourself today. Because of the recent dip in ETH prices, BMNR is sitting on approximately $7.5 billion in unrealized losses, and the market has overcorrected in response. At the current price-to-book of 0.8 to 0.83, you are getting the core crypto mining operation, 195 Bitcoin, and a $200 million stake in Beast Industries essentially for free, bundled directly into your ETH treasury purchase at a discount. It is the financial equivalent of buying a house for the price of the land alone and receiving the building, the furniture, and the appliances as a bonus gift. And this entire disconnect is about to be stress-tested by a massive forward catalyst that the market does not yet appear to have fully priced in. Chairman Tom Lee is calling this mini-crypto winter already over. He argues that Ethereum is no longer a speculative token, but the essential settlement layer of the global digital economy, with major tokenized funds specifically choosing Ethereum as their infrastructure platform of choice. His ETH price target sits at $7,000 to $9,000 by early 2026. If Ethereum even begins approaching those levels, the valuation of BMNR's 4.4 million ETH treasury becomes almost incomprehensible to model. But BMNR is not simply sitting back and waiting for ETH to appreciate. They are actively generating growing cash flow from it right now, and the next major revenue step function is launching this very quarter. BMNR is currently deploying over 3 million ETH into live staking protocols. The upcoming launch of the Made in America Validator Network, known as MAVAN, is going to fundamentally change the financial profile of this company. We are looking at a projected $81 million jump in quarterly revenue, moving annualized staking income from $172 million to $253 million. This is not speculative revenue tied to ETH price appreciation. This is real, structural cash flow that provides a hard, fundamental backstop to the stock price, completely independent of whatever the short sellers are claiming. And Wall Street is actively adjusting their price models to account for it right now. Cantor Fitzgerald holds an overweight rating with a target of $39. B. Riley is sitting at $30. The consensus target of $34.50 represents 63 to 100% upside from current levels. When top-tier analysts are calling for a near doubling of the stock price while it holds at a historically validated institutional floor, that is the textbook definition of an asymmetric risk-to-reward setup. Now let's get into the precise technical picture and the specific trade setup for the week of March 9th through March 13th. BMNR is deeply oversold right now, with an RSI reading of 35.66. The ideal accumulation zone is between $18.68 and $19.20, as close to that institutional support floor as possible. Primary support holds at $18.68, with a secondary historical floor at $17.19 below that as a last line of defense. On the upside, the first major resistance to clear is the 20-day moving average sitting at $21.50. Push through that, and the next targets become $22, then $25, with a longer-term recovery trajectory building toward $30. But there is one technical wildcard in the options market right now that could compress this entire timeline into days rather than weeks. Current short interest in BMNR sits at 6.05% of the float, roughly 27 million shares short. But look at the options flow. 66% of all options volume is in calls. Over 7,300 call contracts are concentrated at the $22 strike, with massive open interest expiring on March 13th. If BMNR clears $22, market makers will be forced to aggressively buy back shares to hedge their exposure, potentially triggering a violent gamma squeeze that could move this stock far faster than fundamentals alone ever would. We are already seeing unusual volumes spiking at the $25 strike for late March. Is it really so hard to imagine this running 40% in a single week if that squeeze ignites? The powder keg is officially lit, and the fuse is getting shorter every single day. Before I give you my final verdict, I need to give you an important reminder like always. Nothing in this video constitutes financial advice. I am not a licensed financial advisor, broker, or investment professional. Every trade carries real and substantial risk, and BMNR is a highly volatile, high-beta asset in a sector that can move violently in both directions without warning. Always conduct your own due diligence, size your positions responsibly, and never invest capital you cannot afford to lose entirely. The analysis shared today reflects publicly available information and my personal interpretation. It is not a guarantee of any future price movement whatsoever. With that said, here is where I stand. Despite the macro chaos, the coordinated short attack, and the Ethereum headwinds dominating the media cycle, BMNR's underlying fundamentals have never been stronger. Zero corporate debt, a 9 billion plus ETH Treasury, a price-to-book of 0.8, a validated 1868 floor that survived every single thing the market threw at it this week, a structural staking revenue catalyst in MAVAN launching this quarter, and a Wall Street consensus target of $34.50 that implies nearly 100% upside from here. For me, the current level is a strong buy with clearly defined risk. Now, I want to hear from you directly. Do you believe BMNR breaks above $22 and triggers the gamma squeeze in the coming week, or does the macro environment force one final retest of the floor before the real rally begins? Drop your honest take in the comments below. This community's perspective genuinely shapes the analysis I bring to you every week. If this breakdown gave you an edge today, hit the like button. It helps more traders find content like this, and it keeps this channel growing. And if you are not already subscribed to Smart Stock Sam, what are you waiting for? We drop setups and breakdowns like this every single week. I will see you in the next one.